So Florida might be ready to eliminate property taxes for most homeowners. But here's the thing nobody's talking about: the cutoff date. If you move here before December 31st and you're in one bucket, but if you move here after, it puts you in a different bucket. So today I'm going to break down what that actually means. So let's jump right into it. I'm Eugene Fulton. I'm a licensed real estate agent down in Southwest Florida. I specialize in helping out-of-state buyers, mostly from New York, Jersey, or the Illinois area, make the move down here. I work Charlotte County and Sarasota County specifically. That is your Port Charlotte, Punta Gorda, Inglewood, Venice, Northport, and that whole corridor. So I do these videos because when people are relocating down here, they want actual information, not what they read from 1,300 miles away, just the straight up facts so they can make an informed decision. And this is one of those topics that keeps coming up where the facts do actually matter. So let me be clear about what it is that actually passed. So in June, the Florida Legislature passed an amendment called the Save Our Homes from Excessive Property Taxes. Right, so it was passed 75-26 in the House, and then the Senate passed it 30-9. The governor called in a special session to get this done. But, and this is an important but, it's not taken effect yet. So because this changes the state's constitution, it has to go to the voters. It's going to need 60% voter approval to pass. So nothing has changed yet. Nothing gets decided until the voters decide in November. But should it pass, Florida has something called the homestead exemption, which means if this is your primary residence and you file for the homestead exemption, the first $50,000 of your home's assessed value is exempt from most property taxes. It's been that way for quite a while. But under this new amendment, should it pass, that exemption jumps to $150,000 in 2027, and then in $250,000 in 2028, and then going forward, it gets adjusted for inflation. So what does that mean in plain numbers? So roughly for 60% of Florida homesteaded homeowners, that $250,000 exemption would wipe out their entire non-school property tax bill. The non-school portion is about 60% of your total property tax. And yes, you heard me correctly. I said non-school. School district taxes will not be included in this. The lawmakers have specifically carved those out. So you're still going to have to pay the school portion of that bill regardless. That's roughly 40% of what most people pay with their current tax. So what it also does is it directs the legislature to eventually create a framework to fully eliminate property taxes on any homestead property. This is a future step, but this is something that's coming down the line in the future. There's been no specifics about it yet. Now, for those of you thinking of relocating, this is the part that you're going to want to pay attention to. So this amendment has a two-tiered system, and this will be based on when you establish the residency down here in Florida. So I did mention a cutoff date. So the cutoff date is December 31st of this year, 2026. So if you establish your residency by then, which means you own a primary home in Florida and you have it homesteaded by that date, you'll get locked into that first tier. So which means you'll get kicked in for that $150,000 exemption starting January 2027. And then in 2028, it goes to $250,000. But however, if you decide if you're moving to Florida after the first of the year, meaning January 1st, 2027 or further down, this will put you in the second tier, which means you'll be currently under the current exemption Florida has always had, but you'll be in a 5-year waiting period before you can qualify for the full exemption. So if you were to buy a house, whether it's in Charlotte County or Sarasota County in March of next year, you will be stuck under the old exemption structure till 2032. I know it's found out that analysis of some of the language suggests that you could potentially rent in Florida and get your driver's license, registering your vehicle with the intent of making it your permanent home. You may qualify as an established resident for the cutoff. The verbiage isn't clear on if there's any other things that need to be checked off as well. So for that, I would say you probably want to consult the Florida real estate attorney. If you're planning to move anyway and the time makes sense for your life, buying before the end of 2026 could lock you in for full eligibility day one, should this amendment pass. So that is something worth factoring in. But that shouldn't push you into a bad decision. So I'll speak more about that in a minute. But I will say real quick, if you are in the planning stages of moving out to Southwest Florida, and you want to talk through how this affects your specific situation, I do free 30-minute calls. There's no pressure. It's just a conversation about your specific situation and your timeline. The link is in the description. Now let's get into the upside. So for the people who are already here in Florida and have established residency this year, those are some real savings that could stack up, right? So since the height of COVID, property taxes here in Florida have gotten completely out of control over the last several years. Home values have spiked as everybody was migrating from out of the state. Even with the existing Save Our Homes cap, which that limits how fast assessed value can increase, the tax bills have still gone up for homeowners. So this amendment would provide meaningful relief for a large number of those people, especially for retirees who are on fixed incomes. So that's really not a small thing. Reducing or eliminating that altogether every year matters when you're trying to manage a budget that isn't growing. But for you folks thinking about relocating, Florida was already one of the most tax-friendly states in the country, right? So we didn't have any income taxes. There's no estate tax. It's a lower sales tax than New York or New Jersey. And if this passes, this is another meaningful layer to that picture for primary homeowners. And there's also other provisions that might benefit everyone, even if you buy in 2027 or later. So the amendment caps annual assessment increases on non-homesteaded property at 5%, which is down from the current 10%. So if you own a rental or an investment property in Florida, or you're thinking about purchasing a second home while you keep your place up north, that cap reduction still works for you in your favor. And that doesn't matter which tier you're in. Now, what about the other side? And this is important as well, because if you're moving into a community, what happens to that community's finances matter to you, right? So property taxes are the primary revenue source for all your local amenities, for the local governments, right, in Florida. These are the counties, your cities, and some of the special districts, right? They fund stuff like such as the roads, your fire departments, the public service like libraries, your parks, infrastructure for the utilities. So these are the kind of things that make the community, I guess you could say, run and function. So the legislature's own physical analysis estimates that this amendment would reduce the local government revenue by $4.6 billion in the first year alone. That is a huge gap. Now, the amendment does go on to say that it will create a state trust fund to help the local governments with those core services. But some county governments have said, what are core services? And the Physical Policy Organization has also asked, will this be enough and how sustainable will it be in the long term? But the more broader question that I think that everybody's asking is, where does that money get replaced from? A lot of people think it will be shifted toward the higher sales tax. You already know Florida currently has no income tax, and the state relies heavily on sales tax. So if the local government loses property tax revenue, the political pressure to raise revenue somewhere else starts to grow. So the Tax Foundation, which is a nonpartisan organization, is especially concerned about this. They have said that shifting from property taxes to a heavier sales tax reliance can make a state's tax structure less stable and less competitive over time. So none of this is certain. It is a genuine policy debate, but if you're buying in Southwest Florida and you're planning to live here long term, you should just know that it exists. Another thing is that it still needs to pass in November. It needs 60% of voter approval. So that's not a given. And you can expect the counties, cities, public employee units, they're going to campaign against this probably hard. So I would not base a financial decision off this alone. So if you're in Jersey or Illinois, what does this all mean for you, right? So a couple things. First thing is, this is not a reason to panic or rush to buy a home. If the home doesn't make sense for you financially right now, potential property tax benefits doesn't change that for you. You still need to think about insurance picture, understanding your flood zones, HOAs. If you're in a new community, does it have CDD fees? What those look like? All those things are the most important. The second thing is, if you're closer to pulling the trigger and timing does work for you by December 31st, then I would say yes, that would be a factor for you. But I would not say it's not a reason to buy, but just more of a data point in the right decision. And don't forget to talk to a CPA or a tax professional who works with Florida relocations. Everybody's situation is different. So it would depend on what state you're living in, whether you're working or not, your income. You have to get a full tax picture of moving to Florida. It involves just one amendment that may or may not pass. The fourth thing is we have to watch to see what happens in November. I will be covering the vote no matter which way it goes and what it means for you if you're watching out of state. So please subscribe so you do not miss that update. So to wrap everything up in summary, Florida just passed a major tax amendment in June of this year. So if the voters approve it in November, the homestead exemption increases to 250,000 by 2028, which would eliminate or significantly reduce most of your non-school property taxes for all you primary homeowners. School taxes will still be paid, and if you're moving in after December 31st of this year, we'll have a 5-year grace period before you can qualify for that full benefit. So the upside is real savings for a lot of homeowners out here. But the honest questions are about how local governments will function once that revenue is gone. If you are planning to relocate to the Charlotte County or Sarasota County area, whether that's Port Charlotte, Punta Gorda, Inglewood, Venice, Northport, and you want to understand how all this fits into your move, please reach out. We work with out-of-state buyers who make these types of decisions all the time. I'm happy to walk you through what your specific situation looks like. There's a link to schedule a call in the description. And if this video was useful, please share it. This is exactly the kind of thing people planning to move to Florida need to know about and want to know about. As always, thanks for watching, and I will see you in the next video.